Welcome to our podcast, Growth and Inspire. Today, we're going to talk about taxes for self-employed professionals, which include freelancers and business owners, part-time or full-time in areas such as delivery, construction, restaurant, and beauty salon workers. I'm your host, Bonnie Yam, and we'll break down different tax strategies and deductions in a way that's easy to understand, so we can help you maximize your profit and minimize stress. Whether you're just starting out or a seasoned entrepreneur, we have got expert insights and actionable tips to help you stay compliant and save big. With us today is Atilio Calderon. How are you, Atilio?
Good afternoon. How are you?
Great, thank you. Now, Atilio, can you make a quick introduction about yourself?
Well, Atilio Calderon. I am, by training, I am a tax accountant uh, and also a business administrator. That's my background from education. I have dedicated many years uh, to the tax profession, helping individuals and businesses maximize their profits and reduce the liabilities and savings. So,
Wonderful. Yes, thank you. Well, let's dive in, okay? So self-employed professionals face unique tax concerns since they're responsible for both their personal and business-related taxes. Now, we're going to go in and talk a little bit more about the most common tax concerns and tips to manage them effectively. Let's just start, by asking Atilio, what would be the number one advice you would have for them?
well, for self-employees, mostly contractors or anyone who's working basically on their own. It could be contractors working on their own. There are some contractors that are quasi-employees, not exactly employees, but they still need to follow the same rules. And one of the rules is keep track of your expenses. Uh, be a bookkeeper at the same time of a business manager because you need to juggle between managing your business and keeping track of your books because you need to have accurate records of expenses as well as income. You need to have proof of the income that you received and from who and how much. That's why saving the invoices, it's important.
Mhm.
Saving receipts on payments, purchase of any kind of supplies, anything, you have to have proof. As spreadsheets are help us manage all that uh, work,
Mm,
um, but still need to keep the original receipts.
mm,
The IRS wants to see original receipts.
mm.
After they have seen them, then they work on electronic digital information, but they want to see receipts first. That's
Wonderful.
first advice for anyone.
Thank you. Yeah. I know there's a complexity about whether you are employee or independent contractor. So can you talk a little bit about that too, and maybe the tax implications if you're independent contractor?
Yes, it is. There is a fine line on a couple of them. Well, employee, you work for somebody, they hire you and they offer you an hourly rate or a salary, whichever. And then they, at the end of the year, they give you a W-2, which shows how much they pay you for the year, how much they withheld in taxes, Social Security, Medicaid, state tax. Uh, Retirement funds, whatever they are supposed to hold as the employee who's contracting you to do the work. They are responsible for all that. So that's an employee. Now, there is the non-employee compensation. When you are not an employee and you get paid similar to an employee, you get a 1099 NEC, where they show how much they pay you for the work they hire you for. They provide some direction, but not entirely like an employee. They don't provide tools. That's your own expense. So that's 1099 NEC. 100% contractor, everything is your responsibility. The client, in this case, only tells you what they need, and this is the agreeing rate. The rest, you have to decide on how you want to do it and when and everything else. That's a 1099 miscellaneous. So there's three different things. And then there is others. For example, preachers receive a W-2, but it's classified a bit different because their income is excluded to a point. And those are the main differences that you need to be careful with.
Careful about,
and
yes.
knowing what classification you fall within.
Yeah, so if I'm an independent contractor, so I have to report my own payroll tax, the Social Security, Medicare, and all that. If I'm an employee, the boss will help me figure all that out, and also the withholding that's being withheld from IRS or state, they will help me do most of it, all of
Right.
it, basically. And if,
Right.
if I'm an independent contractor, I have to take care of all that withholding, adjustments, and all that, and report it on a quarterly basis, right?
That's correct. It needs to be reported in a quarterly basis to the internal revenue and also to the state.
Okay,
The
so that's
Department of
pretty important.
Finance in the
Yeah.
state. Yeah.
So you don't pay when you file your 1040. You pay
No,
every quarter.
no.
So
Yeah,
yeah, so
that's just the year-end report of the result of your 1 year of operations, what your profits were, and what your income tax is based on what you're reporting.
yes.
They pretty much know
Mm,
what your gross income is because they get your quarterly reports
mm,
and they have an idea of what your net
what you
income
owe.
might be. So that's why we need to be careful on what to report and how.
Yeah. So I
Gotta follow the lines. Otherwise, it's fraud. They consider it intent of fraud, and that is penalized to the extent of the law.
So yeah, I think the main point to be careful about is that if you are independent contractor, be careful about, actually you have the obligation to report estimated payroll taxes. If you don't do
Right.
that, and the state
Right.
tax, if you don't do that, you might get into trouble. Yeah.
Yeah, if you don't pay your estimated income taxes, what's going to happen at the end of the year, you will still have to pay it,
Have to
but
pay.
then you have to pay a penalty for
Penalty.
late
That's
filing
not good.
and interest.
And interest.
And the interests are accrued on a daily basis for the length of time that it takes you to pay that balance due at the end of the year. So you don't wanna fall into that crack.
No,
You
no.
wanna do it quarterly and in a timely
Yeah, on top
manner.
of everything. Yeah, yeah. Well, thank you for the advice. Well, now let's go on and talk a little bit about like deductions. How can I maximize my work-related deductions then, since I'm in?
Well, we have to understand what the requirements are for me to conduct my business.
Mm,
I'm going to use you as an example. You're a consultant.
mm.
You not only consult clients in your office, but you also go out and see
Travel, yes.
clients at
Yes.
their locations and make sure that the service is provided. And
Hmm.
that gives you expenses like you have to use your car to move from the office to the client's
Travel,
office or home or whatever
travel
it
expenses.
is,
Yeah.
whatever you're gonna meet him.
Mm,
You need to collect the mileage for that.
mm,
You need to know what the fuel was consumed.
mm,
Then you need to, if it's 100% used vehicle for business,
mm,
you have to depreciate it. If not, it's just an expense
mm,
on the vehicle, which is at this point is not as listed property.
mm,
It's not 100% capital investment.
mm,
So a listed property is only expense.
Mm.
based on the mileage and your actual expenses.
Actual expenses.
You don't have to depreciate. But if it's a capital investment, a car, a truck that is 100% for business use, then it has to depreciate. There is also another form of expense for a capital investment asset, and that is known as Section 179, which is a way for you to write up part of the total investment up front, in addition to the depreciation for the first year. Section 79 allow you up to $100,000, $150,000 on the first year, plus the depreciation for the first year. So it gives you the biggest impact on your tax return. The reduction on your tax liability is much greater. We need to know that so that we take advantage of these opportunities to reduce our liability. But at the same time, we need to keep records of everything.
Yes.
If we're gonna claim the mileage or the expenses, we need to keep a log of all the miles.
Yes.
We need to keep the receipts of every time we stop at the gas stations and fill up the tank.
That's
We
right.
need to keep the receipt when we renew our registration.
That's right.
Repairs, tires, everything that's done to the car.
Yes.
So that you can expense those on the mileage or the trips that you made for business purpose. The personal part is personal. That's not deductible.
Separated.
So if your business use is 20%, you will deduct 20% of the total expenses. The other 80% is personal.
Personal.
That's your cost
You need to keep track of it.
of having a business.
Right.
The cost of conducting the business is only 20%.
Yeah.
If you buy insurance
Yes.
for the business,
Mm-hmm.
that's 100%
Deductible, right? Yeah.
because it is for the business.
Mm.
Insurance for a personal use is a different category. Life insurance is not deductible.
Not deductible. Insurance,
It is a personal expense. Retirement fund is not deductible. There is a type of retirement fund that may be deductible, but I'm not gonna discuss that right now. I actually gonna defer to Bonnie
Okay.
in a
Let me
little
just,
bit, but it's
that's a good time
I'm
to
putting it up front. Yes.
yeah, talk a
There
little
are
bit about
some.
another way for you to maximize your deductions. So I think Atilio mentioned that, a lot of expenses that you attribute to running a business, and some of it would be capital expenses, such as your vehicle, maybe your computer too. Okay, so and some of it would be actual, like like the gas and all that, meals, expenses. So keep track, every single day what you spend on whatever. And then after all that, I still have a lot of money, I don't want to pay so much taxes. So what do you do? A lot of us, we don't want to work every single day until the last day we are on this planet. So we want to save for what? Retirement. So there are a couple of ways for doing it. And then Tito mentioned, so pre-tax contribution and after-tax contribution. Pre-tax is you can actually lower your taxes. Whatever that goes into your savings account will lower the amount of tax you pay to the government. So that's great, right? But I would say, some people like Roth. Roth would be you pay taxes now, but when you take out the money, after so many years of growth, you don't pay any taxes on the gains. And when you take it out, it's tax free. So if I don't pay a lot of taxes now, so I'm just 20 years old, I start working, so minimum lowest tax rate. So maybe you want to think about Roth. So there's pre-tax and after-tax. Pre-tax, a lot of people will very high in tax rate, like 30 something percent. So they want to lower the taxes by lowering the amount of reportable income. And when they retire, okay, so I am not making so much money because I stopped working. So I only take little bit out, so I won't be paying so much in taxes. So there's one way of how to minimize the taxes, but let's just think about, how can you minimize taxes, because uh you can actually get credits from the government. I love credits because it's you can kind of call it almost like free money, right? So with Secure Act 2.0, if you don't have a 401k, I would recommend thinking about it. Why? Because the government is paying up to $5,000 of credit for 3 years, 100% of the expenses. So, so this is like lots of free money, okay? And it works out like $250 per employee up to 50 employees. So another $500 credit if you add auto enroll. And let's say you want to give out company match to an employee, you can get more credits, like $1,000 per employee on a declining scale over 5 years. So the money that you match, free credit, right, from the government. The startup costs, 100% of the startup costs up to $5,000 for 3 years. So I really can't think why not. And besides all the other tax benefits from starting up a 401k plan. So I think that's a great tool. And if you need assistance on setting up a plan, we can certainly help too.
Yeah, it is a great tool for the business and it helps reducing the tax liability, which is what we all look for. There is one more thing that I forgot to mention when it comes to the contractor, the self-employed individual. I'm sure that many people know about it. They have heard, but which is the home office deduction. It is a credit that goes against your taxable income. And it is good to take it. However, you need to be sure that it is an area in your home within the four walls or the garage of the home that is used exclusively and regularly for the business use. And it needs to be measurable, and you need to be able to show that it is in fact
Special area is
for business. An example, in my case, I have a room in my house, which is my office. It's a 12 by 12, exactly 12 by 12. So I need to do the square footage. I need to use that square footage to calculate prorate the expense that I can deduct on my conducting of the business from that location. It's not just, okay, this is my footage, this is what I spend, okay, here I'm going, deduct. No, it's prorated based on the square footage of the area. If that 12 by 12 represents a 10% of your total expenses to maintain the house, 20% is what you're gonna be able to deduct. And there is a calculation also that needs to be conducted, because the maximum that you can write off as a credit is really $500. So it's $500. So it's not like it's thousands. Yeah, it's $5 per square foot. In this case, 5 times 300. We're looking at $1,500. So it's not a lot of money, but it goes against the tax. That is the good part. That's why we want it. But it's highly sensitive and is auditable deductions. So we need to be careful and make sure that we do it right.
Do it right.
Because that's what is known as a red flag deduction. It's highly monitored for that reason. It goes directly against your tax liability.
Yes.
And that's mostly for the contractor, the self-employed, or anyone who conducts business, even the employee who works from home
Go home. Oh, yes.
can do that too. You just gotta be
Yes, it makes
careful
sense
because
because
if the employer reimburse some of that expense, then
mm,
you cannot do it,
mm.
or maybe just a portion because you get reimbursed for half of it, for example.
But a lot of people are working hybrid now, so
Yes,
it's not just 100% at the office. A lot of times you spend a lot of time at home.
that's
Yeah.
correct.
So
And that's like we said before, your chair, your desk, your phone,
your phone,
the
yes.
laptop or desktop computer, everything gets
Mm-hmm.
added up and
Mm-hmm.
prorated against the expenses of your house.
Mm-hmm.
So, and if you get no reimbursement, then you get to deduct whatever the percentage
That's right. Yep.
gives you.
Yeah. And then
Otherwise, it's just a fraction.
Atilio can help you calculate that.
Yes.
Exactly. He's very competent in that area. So should we talk a little bit about health savings account? That's a great tax deductible item as well.
Health
Yep.
savings account is it's a great tool for employees. Uh, it's also what is known as a savers credit because you contribute to the accounts, and those contributions are also deductible on your income tax. It's
Mhm.
not only pre-tax, but you also receive a credit for contributing to that account. And it works similar to a bank
401k.
account
Yeah.
and a debit card. You get a card, you pay for whatever you need, medications, doctor's visits, anything related to your health, you pay from there, and it
Mm.
gets deducted from that account.
That card. Yeah. Yeah.
You must use it throughout the year. It doesn't transfer over to the next year. So it is an amount of money that you're allowed to save pre-tax to expense on your medications, doctor's visits, and everything you need for your own health.
How about let's talk about business structure? A lot of C Corp, might not have set up a company. So what's the benefit of setting a company like an LLC or an S Corp? What do you think?
Yeah, we need to be careful on what classification we want our business to fall in, because it's not just, okay, Atilio Calderon's Corp, what that means. Okay, or Atilio Calderon's LLC, what that means for my business, for my practice. What does it mean? What is the impact of the LLC prefix on my name when I'm conducting the business and I'm reporting my income and my expenses? The sole proprietorship is the self-employee, the contractor who works for a 1099. Everything goes to
Every single penny.
every revenue, every expense goes into a Schedule C. In the Schedule C is where you deduct all the expenses for the business, not the personal. Every business-related expense goes on a Schedule C. The income or the losses goes directly onto your 1040 and is reported on your regular yearly report, 1040. The net earnings from the business have to pay income tax, Social Security,
Payroll
and
taxes,
Medicare
FICA.
tax.
Yes. Hmm.
It's
Hmm.
mandatory for a sole proprietor.
Hmm.
Now,
That's
you may,
15.3%.
yes, you may call a real estate person a sole proprietor.
Hmm.
Also,
Hmm.
a real estate persons whose business is to rent property for a person to live does not report their income and expenses on a Schedule C. They use a Schedule E. And they report all income and expenses the same way as is done on a
Good to
Schedule C.
see. Hmm.
One big difference there is real estate profits pay income taxes, but do not pay Social Security and Medicare. So you have to take provision of that in order to cover yourself, take cover of yourself for the future. You have to have Social Security funds and Medicare for the time when you need
when
it.
you hit 65.
So that's a separate tax that it needs to be covered, and it's not covered through the Schedule E. You have to do a separate.
That's an important distinction. Yes.
Right.
Yes.
So,
Yes.
and if I say I'm forming an LLC, LLC is tricky because it gives you the chance to select how you want to report your business activities. You want to report it on a 1040, you want to report it on a 1065, or a 1020 as a corporation. You have the choice to pick one of the three. If you say I want to report it in my 1040, then it goes into Schedule C, just like the regular contractor or self-employed
pay all the
person.
payroll taxes.
You have to follow the same bookkeeping, the same reporting
Mm-hmm.
that every business does. Payroll, whatever expense, report it on a Schedule C. It goes from your books, from your P&Ls, directly to a Schedule C. Now, if you choose to report it as a partnership, a 1065, that is even more complicated because now you have to divide it.
Divide among the
partners.
partners.
How many
Yes.
partners are there? 2, 3, 4, 5? You have to do the reporting for the distribution amongst the partners, and each partner gets a K1 for their portion of the total income. So
yes, I get it. Yeah.
Very complicated.
Very complicated.
So in addition, and then you file Form 1065, and then you take to K1 and report it on
to
your
1040 again.
Right. So everything goes, everything ends up in the 1040.
Right.
Now, corporation, there is an S Corp and a C Corp. Now, this S Corp is a small business, and the C Corp is the corp. Bigger ones. Thus, we think of the big corporation. It could be a small business, a C Corp. C Corp is a fictitious identity. It's not a person. The business name, Corporation Corp, it's a fictitious entity. It's another entity. It's a person, a fictitious person. This person has to report on 1120. Yes, 1120. I said 1020. I said 1020 before. No, 1120. Yeah. It has to conduct all the bookkeeping for all the income transactions, stock transactions, because corporations have stock. Sometimes they do stock distributions. Sometimes they do dividend distributions. They also have payroll expenses. All that bookkeeping has to be maintained accurate. Right. All that needs to be reported on Form 1120. Okay. 1120 Corp or 1120 S, which is for S Corp. So the difference between the two, corporation is corporation, you have to report it. The corporation has to pay their own income tax. The revenues have to be distributed if the stockholders decide that it will be distributed, and it's got to be distributed via the K1. Stockholders revenue distribution on K1, and it ends up on the individual's 1040. Right? If it's an S Corp, then you also have the option. Distribution as well. Report it on the S 1120 or divert it onto
personal taxes.
40.
Yeah. Mm-hmm.
which will end up there anyway, but they allow you to report it on a 1040,
Mm-hmm.
and it doesn't pay income tax.
Mm-hmm.
It's what is called
Oh,
flow
through.
through entity. All the revenues, all expenses
Mhm.
end up in a Schedule C, and then the individual pays the income tax. They do pay Social Security and Medicare and income tax.
Let me let me summarize because I think this is so important. Make sure that people
Yeah,
get it. Okay, so when we talk about corporation, there's C Corp and S Corp, and then one is a flow through, which is S Corp. So you don't have to pay corporate tax. If any
right.
gains on the S Corp flow through to the
Yeah.
individual 1040.
Flow through is the S Corp as well as the LLC.
Yes, LLC is a selector.
Yeah.
You're selector. Now, the C Corp is double taxation, meaning any income that's made by the C Corp, you pay taxes first, and then you distribute to the individual owners, and then they pay taxes again on the
Right.
1040. So if you're not a very big company and you don't want the complexity, S Corp might be a good way to think about it. And if you want to pay Social Security tax, you can still do that. And then one way to do it is pay yourself a W-2 first under the S Corp.
Right.
So you can minimize it and say that instead of like 100%, okay, maybe I just pay whatever is reasonable for the job that I'm doing for the S Corp. So let's say $60,000 instead of $250,000, huge difference. So you get a W-2 on 60, and then the rest will be flow through to a 1040.
That's one of the advantage of the corporate world, that is,
Exactly,
you can pay
exactly.
yourself
Yep.
salary
Yep.
and be able to deduct your expenses, your own expenses on the salary,
Mhm.
and pay your Social Security and Medicare
Exactly.
through
Get
that
everything. Yes,
payroll. Yes,
exactly. And then because it's a corporation, so it's separate from your personal income
right,
and all that stuff. So you get extra layer of protection. If you ever get into a lawsuit, somebody sue you, whatever, the corporate is liable, not your,
right,
personal side. It's
right.
you got
That's what
that
is
separation.
known as the corporate umbrella.
Yes.
Yeah.
So I think it's particularly, depending on what you're working on, your business type, if you want that extra protection besides the tax saving, it's definitely very advisable to think about setting up a corporation.
Right. Whether it's a C Corp or an S Corp, doesn't matter. They have similar protection for
Right.
the
Right. But
individual.
mhm,
So a small business, you see a lot of S Corps around because it offers
makes sense. Yeah.
the right protection for the size of the business. Yeah.
Okay, I think, we covered a lot. Do you have anything else to add?
Well, yeah, we just need to make sure that we understand what needs to be done.
Hmm.
And I'm sure that the business owner doesn't have the time to be doing the bookkeeping and the reporting, and that's why we're here.
Mm,
We offer the help
mm,
for all these people
mhm.
needing to keep track of their books and
Exactly.
expenses and the
Exactly.
reports.
Yeah,
So
you do what you're
that's
best
why
at
we're here. Yes,
and let us take care of the rest, right?
exactly. Yeah,
Yeah.
we'll help you conduct your business. We're gonna conduct the reporting, you conduct your business.
Call Atilio. Well, okay, thank you very much. So being self-employed means freedom, but also means responsibility. The more you know about your taxes, the more you keep in your business and your future. So if you have any questions, please feel free to reach out to us. A text Belmore 516-596-8842, or just send us an email byam@atax.com. Thank you for joining me today, and keep chasing your goals. And I'll see you in our next episode. Thank you very much.
Have a nice day.
Thank you.